Hello everyone. This is the pre-market report video for today, 24th October 2024 for the Indian stock market in terms of Nifty and Bank Nifty. First, quickly let's have a look at what happened on Indian market yesterday. Nifty opened 100 points gap down, then immediately recovered in the first 5 minutes, but then it had the significant volatility in the next 45 minutes. Part of the reason in the last 2 weeks, Nifty fell near 7%, so it had some profit booking. But at the same time, earlier yesterday, Goldman Sachs downgraded the Indian equities to neutral from overweight. Regarding the reason, they cited the poor earnings, and in addition, they also reduced the Nifty's 12-month target to 27,000 from earlier 27,500. Basically, this Goldman Sachs downgrade was the huge factor, but Indian market was already down significantly, hence I guess so only the morning volatility. Then the positivity in the Bajaj Finance and HDFC Bank and the short covering in the IT stocks overpowered the negativity, so for most part of the day Nifty traded positive. However, the negative opening of the European market put a halt to the Nifty's positive, causing it to fall again and made it to close negative for the third consecutive session. Regarding FII, for the 17th consecutive session they were mega net seller. Yesterday, the net sold shares worth approximately 5,700 crore rupees, and again, as expected, DAs supported the market and they net bought the shares approximately for worth of 6,000 crore rupees. Then, in the derivative market, no one-sided buying or selling. Still, FII holding 67% short position in the index future, and in the option market, most of the participants, including FII, closed significant call option. Hence, the overall put-call ratio increased to 0.8 from 0.67 earlier. If required, please pause and have a look. This is the existing individual participant long and short put call ratio. Basically, the stance didn't change much. Still, FII wants the market to go down. Retail people betting that the fall is enough kind of, and proprietary traders moved from bearish stance to more of the cautious state. So those were the quick takeaway from yesterday's Indian market. Then coming to US market, last night it was bit of a depressing day. S&P 500 opened slightly negative, but the released back-to-back macros kind of increased the worries among investors and pushed it down till around 2 p.m. Eastern time. Just after the US market opening, 30 minutes after, US government released the number of house sold for the September month. The data came as 3.8 million house sale against the expectation of 3.8 million house sale, which is the expected value only, but the 3.8 million house sales in 1 month is an indication of good economy, so it increased the worry around the November month rate cut. Then on top of that, more FOMC members released the statement that they need to be less aggressive in the rate cut kind of, all increased the treasury bond yield, which in turn puts more pressure on the US market. Finally, 2 hours before their market closing at 2 p.m. Eastern time, Fed released the beige book. I already explained about the beige book in previous pre-market videos, but for everyone's benefit, I will repeat again. Apparently, it is a custom for Fed to release the beige book just 2 weeks before the interest rate decision. So this book will tell the present status of the US economy as a whole, state and district wise. As a rule of thumb, this book data will be and has to be used in the upcoming FOMC meeting for the interest rate decision, so it always carries weightage. In that, most of the state indicated that their economy and labor market was fairly stable, so this beige book also increased the worry regarding the interest rate cut. Because of all these, in the end, Dow Jones was down by 0.96%, S&P 500 was down by 0.92%, and Nasdaq was the major dragger, decreased by 1.59%. Even US VIX increased over 5%. Almost all the tech stock all closed negative. However, Indian ADR just followed the Indian market, it didn't follow the US market. Both IT stocks ADR closed positive, whereas in banking case, in line with Indian market, ICICI Bank ADR closed negative. On the contrary, HDFC Bank ADR closed positive. As far as I think, there is no fresh movement indication, and as it is, IT looks mildly positive and banks were more of a mixed. Then regarding GIFT Nifty, it just followed the US market. When the US market was at its day's low, GIFT Nifty dropped below 24,400. But when the US market recovered, GIFT Nifty also recovered. At present, 3 a.m. Indian Standard Time, it closed at 24,496 mark, equating that with the spot market. For now, it's indicating flat to positive opening. In terms of oil price, it didn't change much. At the time of this video, WTI crude trading near 71 US dollars per barrel and Brent crude traded around 75 US dollars per barrel. Then regarding stocks in focus, I wrote an article in the YouTube community page in addition to the detailed open interest volume analysis. If required, please have a look there. Please note, I don't have any account in Telegram or WhatsApp. Please be aware there are some fake accounts floating. I tried my level best to take it down, so please be cautious. Anyway, as a summary, US market negative, but in the aftermarket hours, Tesla released the good earnings. So that stock in the off market, it increased over 12%. So now US future market started to trade positive. So global momentum improving. In addition, Indian IT ADR and GIFT Nifty for now all indicating the flat to positive opening. However, have to be little cautious. As I said, FII index open interest data favors the furthermore negative trade. Moving on, as per stock open interest, IDFC First Bank, BHEL, M&M, SAIL, Hindalco and Cummins India got an increase in open interest along with a negative close, indicates the short build up. On the other hand, NMDC, Shree Cement, MCX, Coforge, Godrej Properties and Emphasis got an increase in open interest with a positive price close, which means these stocks got the long build up. About the things to look out, ITC, IndusInd Bank, NTPC, ACC, JSW Energy, Colgate Palmolive, Godrej Consumer Product, Aarti Drugs, Adani Total Gas, Adani Wilmar, Mahanagar Gas and IEX are some of the Indian companies is going to release their Q2 earnings. Then in terms of macro, early morning Japanese PMI data is due to release. Then during our market time at 10:30 am Indian PMI. Then between 12 to 2 pm France, Germany, UK and whole Eurozone PMI data are scheduled to release. And in the aftermarket hours for US, their PMI data, weekly jobs data and new home sales data are some of the items we need to keep an eye out today. Coming to technical, as we discussed, Nifty opened 100 points gap down and was volatile and positive throughout the day. However, then finally closed below 24,450. Thus on the daily chart, Nifty formed a small bullish candlestick pattern with a long upper shadow resembling a bullish inverted hammer pattern, though not a classical one. This is generally a bullish reversal pattern, but it needs confirmation in the today's session. However, on the negative side, Nifty maintained a lower high, lower low formation for another session with RSI momentum indicator having a negative crossover. Furthermore, Nifty also continued to trade below 100-day exponential moving average, which all indicating the weakness. Hence, overall, the 20-week exponential moving average 24,550 and the 20-week simple moving average 24,700, which are the key hurdles on the higher side. As long as Nifty trades below these levels, consolidation might continue with immediate support at 24,400 to 24,350 zone. If Nifty breaks this support area, it might push further down towards 24,200 to 24,000 zone. In case of Bank Nifty, it opened 140 points gap down. However, for most part of the day, it traded near flat and closed near flat. Thus, on the daily chart, similar to Nifty, Bank Nifty also formed a bullish inverted hammer. At present, Bank Nifty trades below the 20-day and 50-day exponential moving average and it is near the 100-day exponential moving average 51,100, which all crucial for direction going forward. Hence, until Bank Nifty holds below 51,550 zone, we can see more weakness towards 51,000 and then 50,750 level. On the upside, the resistance is at 51,550 to 51,750 zone. On the weekly options front, the maximum call option open interest was at 25,000 strike, followed by 24,800 and 24,700 with maximum new call option rating at 25,000 strike and then 24,600 and 24,500. On the put outside, the maximum open test was at 24,000 strike, followed by 24,200 and 24,400, with maximum new put option writing at 24,200 strike, and then 24,400 and 23,700. Thus, from options data, it indicated that Nifty is likely to remain within the broader range of 24,000 to 25,000 for the short term. So that's all in this video. Hope you all got some information. Please consider subscribing the channel and liking the video so that it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment decision based on this, as I'm not a SEBI registered advisor. I'm doing this for my and viewers' educational purpose only. Thanks for watching.